This is CT Johnson, and today is day 124 of the COVID-19 pandemic. This is the Funding Doctors COVID-19 Financial Survival Guide. Today I wanted to talk to brokers out there. I've been getting quite a few phone calls from brokers who are in the market. Everybody is sort of looking for which funders are still open and doing business, and this has kind of led to a situation where a number of the lenders are they're basically have reverted to being brokers. So previously they had their own funds, but for whatever reason they've withdrawn them from the market, or their investors have backed out, and that has led to a situation where they're having to try to broker deals out. That's really not useful, because it gets into a situation where you're submitting something to somebody who you believe is a funder, and in fact they are just broking it with you. So today I wanted to talk about how to figure out who's got the money. So the real essential question is, where does the money come from? That's the essential question to ask a funder when you're dealing with them. And it's helpful when you start thinking about where the funding is coming from. Is if you think about it's basically a kind of a graph. Is that there's sort of big money and small money sources, and there's groups who will take a high risk and groups that will only take a low risk. So if we think about it on that kind of an axis, what you would think about like an individual. An individual will frequently take quite a high risk, but they have usually quite a small amount of money. On the other hand, banks, the big four banks particularly, will only do a small amount of risk that they'll take. They'll run you through the ringer, make sure their risk is mitigated, all of the things that they do to make sure that their money is safe, but they have huge dollars that they can put towards something. So it's useful to think of the four sources in those terms. So let's look at the first source. The main source of where money is coming from when you're talking to private lenders is it's mostly coming from investment funds. So what I mean by that is superannuation or stock market funds, something like that. These people have money that comes in. They then go out looking for ways that they can invest that money in places they can do it. And one of the places they do it is in funding property development. Those people tend to have very large amounts of money. The non-bank lenders who are being funded through investment funds, they tend to have large amounts of money on hand, frequently billions of dollars that they'll have to deploy, almost always hundreds of millions of dollars, but they will be relatively low risk in what they will look at. So these are the lenders that you know who are out there who won't take big risks, who will only do pretty good deals. For the most part, those guys are actually still in the market right now. They are being more conservative, but they've got lots of money. They have to do something with it. And as long as it's meeting their mandate and their criteria, they will go forward. The next major funder for the non-bank lenders in Australia are family offices. So a family office is really just a high net worth individual or several high net worth individuals that have gotten rich enough that they either band together or they actually have to have an organization to manage their money. These tend to be more professional than just individuals, but they're not quite at the level of an investment fund. These guys sit squarely in the middle. They will sometimes do fairly large deals. Sometimes they'll only do small ones. Sometimes they'll do high risk. Sometimes they'll do low. So they tend to be kind of in the middle of the pack, and they kind of tend to define what's going on there. Right now, you have a great diversity among opinions in terms of whether they want to be in the market or don't want to be in the market. Some of them are still in and some of them are out. I would say that probably 60-70% are still in. They have all implemented more conservative criteria for lending. So that's sort of how they're managing their risk. The next group after that is high net worth individuals. So these are people, it's usually developers, frankly, who have made a lot of money in property development, and they have take some of that wealth and they put it towards lending or funding debt deals through lending. Usually, these tend to be smaller amounts of money because it's an individual person, and even if an individual person has $100 million, they're not going to put $100 million on one project. Whereas if you think about a big fund, they will do that quite a bit because that's deploying a big chunk of capital for them. So they tend to be smaller. But the other thing is that individuals tend to be much have a much higher tolerance for risk. So they will jump out there and get into debt situations or loans that the funds, some of the bigger funds definitely won't do. The investment funds frequently have requirements in their mandate with the non-bank lender that precludes them from doing lots of the riskier stuff. So individuals will just take a look at it and say, hey, I like it or I don't like it, and they'll jump into it. So they tend to be the highest risk takers, but tends to be the lowest money. The final group, and the one that is probably the most misunderstood, is foreign sources of money. Because of my background, because I spent a lot of time overseas, because I'm from the United States, I did a lot of work in both Eastern and Western Europe. I worked in China. And I do know a lot of people in those markets who have lots of money to invest. But one of the big misunderstandings is that people usually think that the foreign sources of money both are big, there's a lot of money there, they can do big chunks of money, and that they are high risk takers. The reason that this is fundamentally flawed is that, in fact, they are very conservative, right? They do tend to have large amounts of money, but they tend to only do things that are big, and they tend to only do things that are pretty safe. Where I usually see them competing is if you've got a deal, like for instance, an improved asset. Let's say you have an office building where you are that's fully leased out, or it is completely, and it's in a prime location, all of that, and you want to get a commercial loan against that. You could go to one of the big banks. That's the kind of thing that they do. But foreign investors or foreign funders will frequently be able to beat what the banks will do. And the reason they're able to do that is because frequently they have large amounts of cash. All they're trying to do is to hedge. They only go for things that are large. And the reason they only go for things that are large is because only a large transaction can make it worth the cost to them of doing the due diligence in a foreign place or taking a risk in a foreign place. So frequently they can actually be more competitive on price, but they will only go for large transactions, and they only go for gold-plated stuff, only go for gold-plated transactions. So sometimes people come to me and, when they're at the end of their rope, we haven't been able to find anything in the domestic market that will go for it. They'll say, well, what about foreign sources? What about Singapore? What about China? And I always say, man, that is the last place you want to look. Those are the hardest funds to get. You have to have a huge transaction to be able to make it worth their while. And it has to be really, really super high quality. So that is a key way to figure out who is in the market, who is lending, is ask the non-bank lender, where do their funds come from? It has to be from one of these four sources. If it's not coming from one of these four sources, then they're just acting as a broker, and you can do what they're doing. If you have any questions about this, if you want any insight into who's still lending and who's not, feel free to give me a shout. My name is C.T. Johnson, and I'm the Funding Doctor. Take care.